Good afternoon, guys. It's Saturday, August 20th. My name is Dave Coker, and this is Talking About Finance, where we talk about finance, stuff that's been put on the Telegram channel that me and about 45 buddies, maybe 50 or so, and we just talk about finance 24/7. So, I hope you're all having a great weekend. I hope it's off to a great start. We just had dinner. We're home for a brief stop, and then we're out and about until the dawn out on the coast. It's nice and cool these days, guys. Went down to 12 last night. Lovely doubly evenings. And last week the chill hit the markets, but the night is young. So let's take a look at the S&P 500 last week, and then the wife and I are carousing for the evening. But wow, holy cow. A little setback last week. We'll get into the details shortly, but no worries from my side and no changes. Still investing heavily no matter what. Because buy and hold is the name of the game. People that try to trade, they're lame. They can't do it. The S&P 500 was down 1.2% on the week. It's now down about 11.3% year to date. So it is what it is. Let's not stress. The VIX traded up from 19.53 to 20.6. Also good. The 10-year note moved up a little bit to 2.97. It's up 1/10 of 1% year to date. A little concerning. We're seeing treasuries ride, but again, let's run with it for the time being. Nothing to get concerned about. Oil closed the week at 89.72. It's down about 2.6% on the week, still up about 19.3% year to date. The peak driving season's over in the States. We might start to see some surpluses build up in terms of oil now. So here we are, guys, again. Lots of doubt about the markets, and especially about people like ourselves who buy and hold no matter what. Remember, some call the buy and hold crowd those who dollar cost average. My God! No matter what the local price is, we're buying. They call us psychopaths. Well, yeah, I'm a psychopath by that standard. We keep the faith. No matter what the markets do, we buy. Week in, week out, we buy it all. Anything that's for sale, we're grabbing stocks, high yield bonds, gold, Bitcoin, silver, Ripple. We buy it all. Like I said last week, with this inflation, your cash will soon be nothing but trash. And I've been receiving dividends steadily throughout the month. So on the first business day of September, I'll be using other people's money to buy stocks, to buy some gold, to buy both Bitcoin and Ripple. You simply cannot hold on to cash in this macro. It reminds me of when I was working abroad. Destruction, chaos, emotions all around us. Keep your cool. Choose your shots. Invest that money. And you'll thank me in a year, 3 years, 5 years, 10. It's the way to go. So let's get into the price of the markets and see what's going on. This week, my friends and I were talking about energy, obviously. And here's one that really got us chattering. Bulgaria and a couple other Eastern European states are no longer exporting wood to non-EU countries. Now, they would ban the exports to EU countries, but we're pretty sure there's some regulation that would prohibit that. So in any case, it makes you wonder, guys, about energy and about what these nations feel might happen to the price of energy in the winter when they're holding on to wood, for God's sakes. We know that they could sell that at a very high profit given the cost of wood in the States and in Canada and in other non-EU nations. So it's very fascinating to take a look at that. Pay attention to these anecdotal indicators. We were also talking about returns in the market. Now, this is classic. I can't remember the name of the textbook it came from. It's been all over the internet, though, since. And we're talking up until 2015. We're looking at the S&P 500, SPY, SPDR, and we're looking at the returns, how they were structured. Dividends, earning growth, price to earnings changes, and overall annual return. Now, guys, we're not going to get in and say which one's better or anything like, well, yeah, I will say what's better. Look. You look at price to earnings change, you look at earnings growth, you look at annual returns. Sometimes they're negative. What's positive all the time? Dividends. Yeah, invest for dividends. And sure, sometimes they're relatively low. We see they're down to 1.2. Other times they're relatively high, up to 5.9. And that corresponds with the 2000s and the 1920s, respectively. But the thing is, guys, dividends are constant. When people give me a hard time about investing for dividends, why don't you buy this stock? It went up 1,000%. It's like, dude, companies don't control their stock price at all. They can only influence it. But they have absolute total control over the dividend, and they're loath to cut dividends. So think about that. My clients have been keeping me busy. And I did this at the behest of someone, I can't remember who, basically taking a look at the markets. And the question was, is this something we're seeing only in the United States? No, we're seeing it across the developed market. I did another slide that I won't show you for developing markets, a little bit more sporadic in developing markets. But in developed markets, yeah, look at this. We got the triple Qs, the spiders, and the Dow Jones Industrial Average on the left-hand side, 2267, 177, 1426. And on the right-hand side, we got Germany, plus 2.2%. Of course, they've got the Russia problem. They're very close to Russia, so that's impacting the returns. But you can see these returns across the board are a developed nation phenomena. We see European and Asian developed nations following U.S. shares higher since the June 16th, 2020 lows. Another thing that's really fascinating, of course, we know the story about Netflix. My God, I've been telling people, you know, when I did my MBA, it's all about case studies, most of it. And we talked about companies and looked at cases and what decisions they made that were good, which ones were bad, what the outcome was. Netflix is going to be a business school case study. Even as competitors emerged, even as inflation raged, they kept raising prices. They were really arrogant. They behaved as though people didn't have any choice. They didn't listen to the customer. And now they've got the audacity. I'm on the cheapest plan possible. And now they've got the audacity, the nerve, to suggest that people who are on the cheapest plan will be getting ads. Well, no, no, no. I ain't going to be paying Netflix to watch content with ads. It's called TV. We've got Freeview, something like 168 channels here in the UK. That's it. Not sure where we're going to go. I talked to the wife about Disney, possible, although I do like Para Plus, primarily because I got a big chunk of Paramount stock in my IRA, my retirement account, blue chip. So yeah, keep the money in the family, right? Invest in or purchase your streaming from Paramount. But we'll have to see exactly what happens. Oh, here's a real fascinating one. Now, Turkey. And this really surprised us this week, guys. We saw the Turkish central bank cut interest rates by 100 basis points. So in other words, what every nation, almost every nation around the planet is doing is increasing interest rates. They pull the plug, they cut interest rates by 100 basis points. Inflation's already, CPI, the last read we had on it, it was already 80%, and they cut. And my gosh, you might ask what the long-term impact is. I'm doing this dramatically, aren't I? I don't want to have two slides. But look at this. I've got the lira to USD exchange rate over the past 10 years, and you can see it's dropped almost 90% over the past decade. I spent a lot of time in Turkey, and a wonderful country, wonderful people. The joke in my circles used to be, and they keep in mind they redenominated in 2006. So before 2006, when you went, if you changed 500 quid, you ended up a millionaire or even a multi-millionaire in Turkish lira. And that was always the joke. You'd get off the plane and become a multi-millionaire, right, with Turkish lira. It's really interesting. Now, having spent a lot of time in high inflation countries on 3 continents, don't worry about the people that live there. It looks terrible for us, and of course it is terrible for them. But keep in mind, they survive. How do they survive? Well, they don't hold on to that lira. I'll tell you right now, they move it into the dollar, they move it into the euro real fast. They tend to buy stuff tactically, so they buy it when they need it, they buy a lot of it, they hold on to it. And also, one thing that my friends in Venezuela did that they told me is when they got paid, they left the office immediately. They went out and cashed their paycheck, and they either converted to hard currency or they bought stuff. And one family who I helped get their money out of Venezuela, oh, we're going back 15 years, I think, right? I helped get their money out. They actually bought concrete for about a month. They were buying concrete. I don't know, what the hell are you going to do with that? Well, they couldn't find anything else to buy, but they knew the price of concrete would be higher in the future. It wouldn't go down, primarily because of what was going on with the Venezuelan currency at that time. So yeah, these people are smart. They survive. Oh, and I'll close this off. If you're interested, or tempted, I should say, by any of the cheap Turkish property that's on offer, don't. Unless you've got strong ties to Turkey, you're going to get taken advantage of. You don't speak the language. You're not part of the culture. You're a rich foreigner. You're coming in to buy something that is cheap for you. The people will resent you. and you will be taken advantage of. Different legal structure, different legal system. A lot of times in these nations, I have to admit, I haven't looked at Turkey, but I know some other nations on continental Europe, the legal system doesn't really look upon foreigners too well, especially when on the other side of the dispute, typically over property, there's a citizen, a native-born citizen. So no, you don't need any property in Turkey, whether we're talking a humble villa or a nice island, which you can get it for less than $100,000, but no, it's not for you. And here's an interesting one. Now, I like to look at property indices, as you know, and again, oh, I didn't change that slide. Oh my gosh, holy cow. Yeah, the title should be talking about the housing markets. Sorry about that. But I look at, of course, the coincidental and the trailing indicators, but I also like to look at the NHB Wells Fargo index because it looks forward. And what they're doing is they're looking at the sale in current period, but they're also looking at the sale forecasted by builders and other market professionals over the next 6 months, and they're looking at the interest of prospective buyers as perceived by those building properties to sell in the next 6 months. Oh yeah, this is turning out to be something that might end up as bad as the global financial crisis. It's really fascinating. And here's why I had NFTs on my mind. This, of course, is the Gartner hype cycle. If you haven't seen it, Google it up, take a look at it. It's always worth looking at. And we were talking about NFTs, and my buddies always give me a hard time because they know I made and sold NFTs. But you know, I make art, and if I could sell it as an NFT, well, I'm going to sell it. My art is crude, it's not that good, but people paid stupid money for it. And I think I got them right with the public enthusiasm, the greed, the delusion. If they're paying money for my stuff, I mean, we're talking Ether, and yeah, I made some good money off that stuff. Yeah, they were deluded. Right? And then they didn't buy, and now we're seeing it drop all the way down. And some of my stuff is actually turned over. It's been, because that's the thing about an NFT. When you make and sell an NFT, you get paid for residual sales. So some people who have been buying my stuff have been selling it, not for anything near what they bought it from me from. One went for $6.79. Cents, and I think I sold that for about $2,200, and I got another $6 when they sold to somebody else. But that shows they're despairing. Yeah, so it applies to NFTs, it applies to cryptocurrencies as well, it applies to lots of things. And here's the Bitcoin, well, the crypto, I should say, cryptocurrency market sentiment analysis, the fear and greed index. Yeah, it really is still time to buy. Of course, you want to do the opposite of what the crowd's doing. Although in my case, as you guys know, I buy Bitcoin every Friday. I've been doing that for years. You should pick up that habit. You'll thank yourself, because think about this. Here's an interesting one. Very smart. You can't time the market, guys. Anybody that boasts on social media that they bought at the absolute low or sold at the absolute high is lying. You can't time the market. Nobody ever buys at rock bottom. This guy, when he was buying Bitcoin heavily at 37.40, he didn't buy the bottom. It actually went lower. I've been buying Bitcoin for years. I was buying Bitcoin at those prices every week. Yeah, I bought, and it went down, and I bought, and it went down. And then, of course, we know in a year later, it went up, and it rocketed up. Doesn't really matter. Just buy and hold. Of course, don't do anything foolish. Don't put your life savings. Don't mortgage the house or pull equity out of the house. Keep it diversified. Make it part of your portfolio. Make sure you got stocks. Make sure you got high yield bonds. Make sure you got property. Make sure you got bullion. And then it's time for Bitcoin. Or another cryptocurrency of your choice. Might be Ethereum. I'd avoid the altcoins, but still, get some crypto. Guys, thanks very much for your time tonight. It's been absolutely wonderful speaking with you. It's going to be an excellent week. Whatever you do, don't forget to invest. Dollar cost average. Take care.